Guys, I'm taking an entry here on the pound. I wanted to throw on the video camera real quick. I'm getting filled at 07, 54.07. That's going to allow for a 20 pip stop. I want to get into why I'm taking this trade. One of it, the first part here has to do with the intraday cycle that we've seen in the daily market review for the members last night. We were talking about looking for that second push down with the probable manipulation point being around the 20 level. I know a couple people caught it. It wasn't the clearest manipulation outside of Asia. Nonetheless, giving us that second push down today. But where's that second push going to move? Well, typically we're going to see 3 intraday cycles. We've hit the average daily range. We're coming into a high probability psychological barrier of 5,400. Doesn't surprise me that all this is coming together at the same time. Again, hitting the ADR, sliding through that level that we talk about a lot in the pound, the 54.20 level tends to be a point that you'll see the manipulation through. We have psychological barrier just below it. So after we've made, and again, one last part, we typically need to see them making at least a 90 pip push to consider the reversal. At this point, we've made a 115 pip push, or 100, 114, 115 pips. So we've completed how far they tend to run the price. We've seen 3 intraday cycles down. We've hit the ADR. We're coming into a major psychological barrier. And the point of our entry of 07 is giving us a great risk reward. If they do come down, they take out the stops below 5,400, where's our stop going to be? Well, the 20 pip stop that will allows for a stop at 87. Typically, they're not going to see a 13 pip stop run. You're going to see them break through that psychological barrier of 5,400 by maybe 3, 4, 5, 6, 7 pips. Not, typically not seeing that 13 pip stop run. So I think all the criteria is here, to warrant me taking a trade. This is a trade I take every single time. I've seen the market's completed how far it tends to run on a cycle. It's hit the ADR. We've seen 3 separate intraday cycles down, and it's at the time that we typically look for the New York session to begin to reverse. So really satisfying all the criteria, and then again, it's at that high probability psychological zone, which gives us the great risk reward. As I've always said, and I just put out an article series on the site, one of the common denominators among all profitable traders that I know is always risk reward. It's never, it doesn't mean that they won't have a high win loss, but some of the better traders I know run about a 50 to 60% win loss ratio, but their risk reward is 3 to 1 or better. A lot of times, that's going to be either the nullifier or the quantifier for taking a trade is the risk reward there. If it's not there, it's immediately going to dismiss a trade, and if it is there, it really starts us thinking about, okay, that's a possible trade. So we'll see what happens here. Again, the entry from 54.07, which we're roughly at right now. And we'll see how we progress from this point. We'd like to see those reverse legs back to the upside, confirming the fact that this last push was a manipulation move before again the reversal towards the end of the New York session. So we'll be back shortly, and we'll update this trade. All right, guys, we're back. We've moved up a bit here with an entry of 07. Came down and missed our stop by about 5 pips. We had a big stop run through 5,400, so I really like the setup. Actually, was considering taking a second position after this nice stop run candle here. So we came through again 5,400. Great pen through that level. Was again considering a second position. Didn't take it. Just left the original position on, and at this point I'm moving the stop to break even one spot 54.07 and setting the take profit at 54.47. It's going to be a 2 to 1 on this, and the reason I'm not going for much more is because we go to the hourly cycle, and on the hourly cycle, the way I'm considering this to be set right now, and this could be wrong, I could miss out on a little bit bigger move, but we've seen a first push down here and then a second push down. Now this move has completed, well, let's see here, it's moved about 180 pips, so I don't think it's quite completed the weekly cycle move here. It wasn't that huge of a move last night. It was a little bit bigger than normal, but last night's move about 125 pips, so I do expect the third push later on here, but I expect the market to make a little bit deeper retracement before ultimately making this third push to the downside later on during the beginning of the London session, possibly into the New York session. With the possible, if it makes the move during the London session, could see the reversal during the New York session for the midweek reversal on Friday. So we'll have to see what happens. Really, all that stuff is inconsequential to this trade. Looking for 40 pips on this position. We'll see if we can get it. But at this point, it's a no-risk trade, and we'll see where it goes from here. So I will we'll be back with the close later on to this position. All right, guys. See you later. All right, we're back with the wrap up of this trade. It's actually the 16th of July now, a couple days after I'd taken the trade, and I went on vacation this last weekend, so it took me a little bit longer to come back and do the wrap up. But regardless, the trade was set at limit the last time we were watching live market, and so the close not really a big deal. So, anyways, I want to get this wrapped up, but the key is the key that I'd like to people take away is why the trade was taken. That's the purpose of the videos. You watch some of my videos. There should be a purpose behind the video. It shouldn't be hey, go look at my site, or hey, go do this. It should be you gaining something from the video, and that's hopefully what you can do from this. So I'm going to recap shortly or quickly why I took the trade. Hopefully take those points away and begin to look at New York reversals from a little bit different perspective, and get a different feel for that. One thing that's important: look through the videos if you haven't. I believe it was an April seminar I did. It broke down overall market cycle. That will help you when taking trades. It'll help you to understand, are you in the direction of the overall smart money cycle, or are you not? So if you're new to these videos, make sure you go check that out. Also, a lot of good videos on YouTube as far as that's concerned, or on the site, wherever you're viewing this video from. But looking at this trade, obviously, it did end up hitting my plus 40. I missed out on the gargantuan move to the upside. We're not expecting that. We had seen 2 cycles down longer term. We were expecting a third push. Regardless, got 2-to-1, and not really going to get into the overall cycle where we're at, because that's not the purpose of this video. But did get 2-to-1 on that position. 54.07 close was 54.47, and nice trade overall. Nice reversal trade. So, or nice short-term retracement trade is what I call these. Any trade that's against the smart money trend, a good rule of thumb that I use consistently is that I will not be taking or looking for more than 40 pips, because it's against the overall cycle. So again, go to that April seminar, understand overall cycle, and that'll make a lot more sense to you. The reason I took this trade, the reason I had a belief that this was going to reverse, I'm going to get rid of this third line so we can look at actually where we were looking at the entry. But this level here, 5,400, is where I have this first black line, and that's what we were mentioning as we were talking about this video. We're coming into this point. We had hit the average daily range, which is up here a bit higher at the roughly 54.17 last week. That's where the ADR was. 20 and 80 always seem to turn the pound. 54.80, 54.20, 55.80, 55.20. Again, 20 and 80. Those 20 and 80 points tend to turn the pound. So that's where I started looking for a possible manipulation. As we broke through that, really it boiled down to something very simple. Do I think they're complete for the day? Well, one thing I know is that smart money tends to drive the price in at least 90 pip cycles or 90 pip push. So had we completed 90 pips that day, well, 90 pips for the day was right here. So we had actually gone. At the time of entry, we had gone, 111 pips. So for me, I had believed that we had seen the, at least that 90 pip push, which is giving me a strong indication that they were going to be done for the day. We were coming into the typical, later New York where we're getting this 3-hour window, 8 a.m. to 11 a.m., where we typically see those reversals or continuation of the trend. So that was the second factor, the time factor. We had seen 3 intraday cycles down. Again, smart money tends to cycle the price in cycles of 3. So we had seen a first push down, second push down, third push down. So again, it hit the average daily range. Moved at least 90 pips for that move, completed 3 intraday cycles down, was within the time factor that we were looking at, 8 a.m. to 11 a.m. Eastern. Typically when you see your better setups, your higher probability setups. And then what was the catalyst for the trade for me? Well, if it had satisfied all this criteria to where that's typically enough for them to reverse the price, where are they going to do it from? This is a simple measure of supply and demand. If they are short, they have to buy it back. If they want to buy it back, they have to find sellers to buy it from. So where are they going to be retail selling or retail selling or any other type of selling in general, on this chart? Where would be the high probability level? And that level is 5,400. That's the psychological barrier. That's the reason I expected them to create the stop run of that low, and that's why I said they'd probably run it through there by 4, 5, 6, 7 pips. Well, they ran it through by 8 pips, and that's where they reversed the price from. Why would they do that? Well, you have 2 types of traders below any psychological barrier like that. You have those that are selling the breakout, and you have those that are getting stopped out of a long position because they put their stop just below that, 3, 4 pips, and that's why you'll see the stop run through by 6, 7, 8 pips, 9 pips, 10 pips sometimes, enough to hit the stops before turning the price. If they hit those stops, anybody that's short or anybody that's long getting stopped out, they're again, they were long. You have to close that position. They have to sell it back. That's one type of sell order below that support. And additionally, anybody selling on the breakout. So by driving the price below that psychological barrier, they're inducing that selling pressure, which allows them to buy into that selling pressure, thus closing out their position. That's why they reverse the price on those psychological barriers after a stop run. So all that criteria was satisfied. For me, the risk reward was there, and hopefully you can take something away from this. Once you've seen the extended market, it's moved at least 90 pips. Maybe you've had 3 intraday cycles, so it's giving you the sign that it's going to reverse. It's hitting the typical New York reversal time, and then you see a stop run through a psychological barrier. Well, that's a big red flag. Hey, smart money has just induced the other side of the market. They have trapped traders on in this case, the short position by trapping the traders short that are trading the breakout, stopping out anybody that was long that had their stop below its psychological barrier. And when you see that after all that criteria has been fulfilled, it's a very good indicator that, you know what, the price is more than likely done for the day. Now, the reason I went with 40 pips was, and it's not something I regret, because you follow a trade plan. You need an exact plan to follow so that you can repeat this consistently. And so one of the things that I do is, if I'm looking for, in general, and especially as a new trader, I say stick to what you have planned. As you become a little more proficient, you can deviate a bit more, but you still have to have that basic plan. That basic plan is a counter smart money trend trade. And if you don't understand the smart money trend, again, go to that April seminar. It breaks it down more. But a counter smart money trend trade, typically I want to look for 2 to 1 on the risk reward. So I'm looking for 40 pips with a 20 pip stop. The reason I do that is because your reward is limited if that smart money trend is going to continue the following day. It's why I expected a third push down that we didn't ultimately get, but in general, that's the safe play. Again, why I only went for 40 pips on this position. Well, I hope this video has been helpful, guys. As always, if you have more questions, you're more than welcome to contact us or visit the site. There's a lot of information, a lot of videos, free videos and articles on the site that break this down even more. You can check that out at daytradingforexlive.com. And again, if you have questions, feel free to shoot us an email. I'll be happy to get back with you. All right, guys, until next time, happy trading.